Global markets sold off hard on Tuesday as the US-Israel war on Iran widened, energy prices surged, and investors repriced inflation and interest rate risks. Stocks fell across regions, bonds sold off, the dollar strengthened, and travel-linked shares took another hit. The biggest market driver was energy. Brent crude jumped 8.9% to $84.64, up more than 16% this week, as Iran's Revolutionary Guard said the Strait of Hormuz was closed and threatened ships attempting to pass. Natural gas also spiked. European LNG benchmark prices surged 34% after a 39% jump Monday, while US gas futures rose nearly 6%. The squeeze intensified after Qatar halted LNG production, a major shock given Qatari output is about 20% of global LNG supply. Risk-off hit US markets early and deepened through the session. S&P 500 E-mini futures were down 1.4% and Nasdaq E-mini futures down 1.8%. Pointing to more selling after Monday's volatility. In cash trading, major indexes fell more than 2%. The Dow dropped about 1,084 points, minus 2.22%. The S&P 500, minus 2.06%, and the Nasdaq, minus 2.12%, with the VIX jumping to a 3-month high near 27.3. Bond market sold off too. The US 10-year yield rose to around 4.1% as investors pushed back expected Fed rate cuts. Fed funds futures implied a 95.4% probability the Fed holds rates at its March 18th meeting. The dollar index held near a 6-week high around 99.168. With the dollar stronger, gold fell 2.7%, spot gold was down more than 4% in some trading, and Bitcoin slipped 2.2% to $67,871. European equities sank. The stock 600 fell as much as 3.6% and was last down 2.8%, on track for its biggest daily decline since April. In the UK, the FTSE 100 dropped about 2.7%, with banks sliding sharply and airlines falling as fuel costs jumped and Middle East disruption persisted. Asian markets mostly fell on oil-driven inflation fears. Japan's Nikkei dropped about 3%, South Korea's Kospi plunged over 7%, and China benchmarks fell more than 1%. Australia and Taiwan also closed lower. India was shut for the Holi holiday. Pakistan was the outlier. The KSE 100 rebounded 3.39%, up 5,159 points to 157,132. After Monday's historic sell-off. Most Gulf markets ended lower, with Qatar down about 0.7% after LNG production was halted. Oman fell, while Kuwait closed higher. Saudi Arabia rose, supported by banks and Aramco, as investors bet on state support and a conflict that doesn't drag on. In the UAE, regulators said Abu Dhabi Securities Exchange and Dubai Financial Market will resume trading Wednesday after a 2-day suspension following strikes that hit airports, ports and residential areas. Nasdaq Dubai is also set to reopen. Risk aversion hit emerging markets hard. Central European currencies slid, with the Polish zloty at a 10-month low and the Hungarian forint on track for its biggest daily fall since August 2023, as traders reassessed rate cut space. In Turkey, February inflation cooled on the month, but annual inflation rose to about 31.53%. War-driven turmoil triggered emergency central bank steps, including about $8 billion in FX sales and a sharp jump in the overnight rate, complicating the easing path. In South Africa, the rand weakened about 2.3%, stocks fell around 4.8%, and bond yields rose. In Canada, the TSX fell nearly 4%, led by materials and miners as metals slumped with the stronger dollar. Across Latin America, equities and currencies dropped broadly, with investors focused on energy-driven inflation and capital outflows. Airline stocks across Asia, Europe, and the US extended declines as oil surged and Middle East air routes stayed heavily disrupted. Major hubs including Dubai remained shut for a 4th day in parts of the flow, with large-scale passenger disruption and widespread cancellations. Bottom line, markets priced today as an inflation shock led by energy, stocks down, bonds down, dollar up, and travel hit hardest, with investors now watching whether the conflict stays short or turns into a prolonged supply disruption.